Hi, one of the questions that I'm starting to get from family and friends, people on Facebook who know what I do, is this a good time to jump in and start buying up stocks? You know, the market had dropped about 30% off of its highs. It's rebounded some. So, yeah, market's at a 20% discount to where it was just a couple of weeks ago. And my answer to that question is it depends. First of all, you don't just buy willy-nilly. Listen, the risks that were in the market 2 weeks ago are still here. Did we fix coronavirus? No. How about the oil wars? No, they're still out there. But the fact that the market has discounted, if we are selective, maybe there's an opportunity to take advantage of current situation. Let's check out a couple of charts on things that might be interesting. Now, I'm not giving investment advice. I don't know anything about your current situation, so I'm not recommending you do or don't run out and buy anything that I'm talking about. This is for educational purposes, to get your mind thinking like a savvy investor. All right, so let's go. First of all, why don't we check in with a chart on the overall stock market. So we'll look in on the S&P 500 and look at this bloodbath at the time of this taping. Right, so the S&P went from about 340, got all the way down here to around, well, it closed at 248, 100-point drop. Is that crazy? There's that 30%, and then we saw a little bit of a market rebound. But all the indicators are still negative. This yellow line is a 30-day moving average. And notice when the SPY was above the 30-day, it just kept going and going and going, dropped below, and boom. But where might there be some opportunity? Well, let me show you. This is a chart on Barrett Gold. Symbol is GOLD, gold. And you'll notice that when the market was falling, the S&P gold prices were going up. That's because people run to gold when they become afraid. So if you see a lot of turmoil, might you want to own some shares in GLD? Maybe. Here's a stock that I think is really interesting. So in one day, oil prices dropped 20%. Here's how mine works. Where's the opportunity? Well, what is a high quality oil and gas company? How about BP? So if I look at the fundamentals on BP, what do I see? Sales are going up. Net income is going up. They made, $9 billion in the last 12 months? The stock's at 22. Let's see, analysts say the lowest price should be 24, mid price 39, high price 45. Then if I go to the dashboard and look at the dividend, BP is paying a dividend of 11.68%. Hell, as long as this company doesn't go out of business, that represents pretty good investment. Now, along the same lines, let's look at Occidental Petroleum. This is more speculative. Now, I will tell you the dividend yield on this is 26.58. I mean, in 4 years, one would theoretically have all their money back. Carl Icahn, who is an investor activist, he came in, put in $2 billion into this stock. His goal is get rid of the CEO, get rid of the board, get people in there who know what they're doing and turn the company around. Now, before you jump in and buy this or anything else, obviously you got to know what you're doing, but know that this company right now is losing money. In the last 12 months, they've lost $667 million. They do have assets, right? The company's assets are worth $109 billion. So, I mean, it's not like it's some fly-by-night company, but that would be a bet on whether Icahn can do what he thinks he can do. Let me show you an ETF. It's called TZA. It's a small cap bear 3 times. Basically, this is a stock that goes up when the market falls. So while the S&P was dropping, this ETF went from 37 to 74. Boom, doubled. So again, if we get into a situation where the market is falling and you want to hedge, this is a plausible hedge. So I'm showing you these things because I want you to understand it doesn't matter what the market does. All that matters is what you do about it. But we teach people how to identify opportunity in the market, whether it be with stocks or ETFs. We talk about how to use options for leverage and for hedging. We use call options on stocks that are going higher and put options on stocks that are going lower. On another one of my taping, I gave an example. If you had bought put options on February 21st on the SPY, on March 13th, those put options would have been worth about 800% more. So we teach going both directions. I do it in plain English. I've been teaching people how to interpret the financial markets for 30 years. I'd like to think by this time I've gotten kind of good at it.